Good morning, all. Camelback Trading 2724 and the pitfuturestrading.com coming to you this Tuesday morning, February 4th, looking at the last bunch of days of the SPY ETF on the market profile. And after an inside day yesterday, we're getting our first gap for the month of February, and a large gap it is. But I'm going to put things in perspective right off the bat. The monthly is still very healthy in one time framing up. The weekly is in balance. The daily will now be in balance. But here's the important thing. Here's last week's high. 328.63 was that high. Very, very important. Until you take that out, nothing's changed for me. If you take it out, you stop the one-time framing down in the weekly, number one. Number two, it would put you firmly into January 24th day, which if the market plans on making new highs, they have to take that back, right? You have the afternoon rally high from that day and then the 4 sets of single prints. So first step is to take out last week's high unless nothing's changed and we're really still just in balance. No matter how big. Remember, we had two nice rallies after the 27th, large gap lower. Remember, we rallied 2 days in a row, got into that Friday's range, but never closed inside of it, and then you saw what transpired the next 2 days. So huge coming out of an inside day. All right, and again, I said yesterday, well, we'll show you on the daily chart with those trend lines coming out of an inside day, which way and what we would expect once it happens. A lot of people scoff when I talk about that price seeking its level like water. Well, these are really good indications that it really works because our destinations are far and wide apart. And prices, doesn't have a brain, just like these machines, and they're going to seek its level. So right now, with just over an hour to go prior to the opening, we had a poor high yesterday. We're going to just use that on the downside because right now we have close to a $2 gap to the upside. Okay? I will use Friday's high because there's still an hour to go because that was a dollar high of 327.17 right now. Right? That becomes a moot point if we open above it. That's not a destination on the downside. The first destination would be yesterday's high. Then we don't have anything to 327.91, which was the 30th high. Then the all-important weekly high of 328.63. Then that afternoon rally high of 329.26 on the 24th. And I gave you all the single prints last week a bunch of times. Please have them written down. For the downside, we're going to use yesterday's high as our first destination of 326.16. Then we were 10 wide yesterday. That was going to be an upside destination. It is now a downside destination. 10 wide at 324.68. Then yesterday's low of 320.322, and then the weekly low of 320.74. So as much as the upside destinations are spread far and wide, until we get more market-generated information, look how far and wide the downside ones are. So that's why we're getting this volatility, which is good, but that's the reason why. Game plan. It's easy to say gap rules apply, but there is no way with a gap of this magnitude I'm going to be buying it, especially at the top of a weekly high, coming close to a weekly high. I'm not saying I'm going to short it there either. I'm going to let market-generated information form. Right now we're trading at 328.08. If we were to open around this level at 328.20, the only trade I would consider taking is a very, very, very small put trade, and I'm out if it takes out the weekly high. If it doesn't take it out, then I wait for a counter auction. If we get a counter auction of some decent size off the bat, then I would look to buy a call because then my risk is going to be less. I know my out from yesterday's high. So those are the two trades I would consider this morning. Let's go over the charts. Monthly, again, very healthy. One time framing up for 3 months. We still have that gap below, way below, $20-something below. So the monthly is chugging along. Okay, weekly. We're in balance, right? First step to coming out of a balance is to take out last week's high. Now, you're still in balance if you do that, but at least you stop the one-time framing down. And the fact that last week's low got close to all those other lows, well, balance rules, right? You fail at the bottom of a balance to follow through, you go to the top of the balance. Is that going to happen? Well, that remains to be seen. First step is to stop the one-time framing down. Second stop is you're going to have to get above the trend line again. If you do that, then you're going to have a good chance to go to the top of the balance near all-time highs. Daily. I had it down even though yesterday it was inside because it didn't stop the one-time framing down. Well, this is going to put us firmly in balance. I said yesterday, we're stuck in between the 50-day moving average, which was a tremendous bounce the first time. Not only the first time there, but we never got close to it yesterday, and now we're gapping higher. That's a pretty nice sign that the bulls held that. However, on the daily, we're not going to be close to this trend line just yet. So yes, we're taking out a couple of daily highs, but the key eventually is to get to this trend line and above it. A gap that magnitude, again, I gave you two scenarios that you can do. However, there's also no harm, and I've said this many times, of letting A period form to see what we got out of it. There's going to be, again, on a day like today, you should have multiple opportunities. Be smart. Good luck trading today. Have a great day, and we'll recap at 4 p.m.